The Philippine peso sank to its lowest level ever, closing at 57 pesos against the US dollar.
The Philippine peso hit a fresh record low against the US dollar Friday, closing at 58.50 against the greenback.
Like the collapse of any currency, the depreciation of the Philippine peso is a multifaceted phenomenon, affected by a wide range of domestic and international economic and political conditions. Several major factors were leading to the devaluation of the Philippine peso as of the most recent data update in 2023. But it's important to remember that economic conditions can change quickly. In the second quarter of 2022, the value of the Philippine peso plummeted, reaching a new 18-year low of 57.37 pesos to USD1 in July. During that time, the Philippine peso was the weakest currency in Southeast Asia, causing widespread concern about the future of the country's economy. The Bangko Sentral ng Pilipinas, the country's central bank, does not set a target exchange rate. Instead, the rate fluctuates in response to changes in the economy. The United States dollar is king in the international currency market, and its value typically sets trends for other currencies. The demand for the dollar increased when the Federal Reserve of the United States started aggressively raising interest rates to control inflation. The value of the dollar rises as investors seek better returns by investing their money into assets denominated in dollars as interest rates rise. From the Philippine perspective, Raul Pedro, head of the financial markets segment at Security Bank Corporation, said that a rise in imports has weakened the peso by increasing the demand for foreign currency, since its productive capacity is still underperforming owing to COVID-19 shocks. The Philippines has increased imports to sustain growth. Increased commodity price speculation also contributed to the depreciation of the peso. Pedro saw an uptick in advance imports in June, when oil prices had fallen significantly from their high, indicating that businesses were getting ready for the annual fourth quarter demand surge. These factors have further weakened the peso due to the dollar's strength in the foreign currency market. The effects of a falling peso are complicated. There may be increased demand for Philippine products now that the US dollar is worth more in Philippine pesos. The value of the dollar has increased relative to the Philippine peso, which is good news for OFWs whose wages are paid in dollars. This has the potential to increase GDP, which now relies primarily on money sent home from abroad. However, practical considerations at home mitigate some of these advantages. Still mostly an importer, the Philippines' export capability remains negatively impacted by the epidemic. Additionally, increasing costs of essential necessities, like food and transportation, are offsetting the rise in international remittances received by the families of OFWs. The headline inflation rate in the second quarter of 2022 was 5.5%. much beyond the 2 to 4% range that was intended. As the peso declines in value, it becomes more expensive to service foreign debt. The Philippines owes $55.4 billion in foreign debt as of 2 years back from 2023, with 55.4% of it owed in dollars. Lecturer at the Department of Economics Manuel Gosico said that the depletion of the Philippines' gross foreign reserves, used in times of economic crisis, is a direct result of the decline in the peso's demand. Forecasting the peso's future. Depreciation of the peso is good for both foreign remittances and the competitiveness of local businesses like agriculture. Therefore, Gosico believes the BSP will continue to allow for it. However, a firmer stance against the depreciating peso is also required to prevent price volatility caused by excessive market speculation. Higher exchange rates do drive further inflation, Gosico said, so the BSP is aware of it. Compared to the 75 BPS increase in July, the BSP only increased interest rates by 50 EPS on August 18, 2022. As a result, businesses and families would be incentivized to save money rather than spend it, which would reduce economic development for the year, but prevent inflation and currency depreciation. The Federal Reserve's monetary policy and the rate of inflation in the United States will both affect the value of the peso. Gosico notes that the Consumer Price Index was steady in July, suggesting that inflation in the United States may be stabilizing, but that this means the Federal Reserve must work it downwards. Several complicated causes contributed to the devaluation of the peso during a tumultuous moment in the country's history. Rising oil costs. The international economy saw the ripple effects of the crisis between Russia and Ukraine. The end of the battle is still uncertain and might take more time than predicted. The war between these two countries has a detrimental effect on the Philippines, even though neither is a big provider to the nation directly. Russia is a significant natural gas and wheat exporter, while Ukraine is a top 5 exporter of maize. The European Union and other key trading partners of these nations will want to expand their business relationships with countries like the United States and China, with whom we have direct economic ties. Because of this, both demand and price will increase. A barrel of oil now costs approximately $100, and with 90% of the country's fuel being imported, prices are expected to continue rising. As of this writing, the price of diesel and unleaded gasoline has increased to around 80 to 90 pesos. As a result of our enormous indebtedness, the government does not reduce or eliminate taxes on natural oils, including the value-added tax, VAT, and excise taxes. Inflation. As oil prices rose, one of the knock-on effects was inflation or increased prices over time. Because of its central role in transporting people's desires and needs, logistics is among the sectors hit most by a global oil shortage. Commodity prices go up when the cost of transporting them increases due to a rise in oil prices. Inflation for food and non-alcoholic beverages hit 6% in June, the highest level since the peak of the pork supply shortage early last year. And inflation for transportation hit 17.1% in June, the highest level since August 2008, when the global financial crisis hit the Philippines hard. Stock market crash. Investors are selling off Philippine stocks, causing the Philippine Stock Exchange Composite Index to decline further. Both the PSEI, down 1.86% or 117.19 points, and the All Shares Index, down 1.26% or 40.32 points, or 3,328.35, saw losses today from its previous high of 7,552.20. The PSEI index has fallen over 18% to its current level of 6,041.76. This is very close to being considered a bear market. Furthermore, the U.S. Federal Reserve's vigorous monetary tightening is a contributing reason to dropping prices. The Philippine local market's negative downward trend may be traced back in part to the global market, after the Organization for Economic Cooperation and Development lowered its global economic growth estimates a day after the World Bank did the same. The value of the Philippine peso plummeted owing to the $23.6 million in net foreign selling on the local stock market. Economic activity. According to the Philippine Statistics Authority, the total value of exports and imports from the Philippines hit record highs in April 2022. Preliminary data from the Philippine Statistics Authority shows that in April, the country's overall external commerce in goods, including both exports and imports, was $14.16 billion, more than double from the $6.83 billion reported in April of the previous year. State borrowings. The escalating debt of the Philippine government is another factor contributing to the decline of the peso. Bongbong Marcos, the newly elected president of the Philippines, is keen to go on with the Build infrastructure program begun by his predecessor, Duterte. The projects needed immediate funding. Thus, many loans were initiated with the World Bank and other governments. We are just now beginning to reopen our economy, and the epidemic is not yet declared finished, making it impossible to satisfy the onerous conditions associated with the loan, such as the interest payments. The government has set a goal of 7 to 9% for GDP growth this year, and current projections put the Philippines within that range. Multiple economic and political reasons contribute to the complexity of the deterioration of the Philippine peso. The depreciation of a currency is influenced by a number of factors, including those in the external economy, trade imbalances, internal inflation, interest rates, political stability, and debt levels, effective fiscal and monetary policies, structural changes to strengthen local industries and exports, and attempts to restore governance and investor confidence are all necessary to tackle these problems. This was all about today. I hope you liked this video. Make sure to like this video and subscribe to our channel to watch further new interesting videos. See you in the next one.